Greetings, everyone. My name is Matt Kropp, and I want to talk today about a particular model that already exists in our communities, but I think has the potential to be really mobilized for building kind of financial independence in our state. And it's been around for a long time. But it's the credit unions. So when thinking about the problem, really I think the key thing to consider here is is sort of the too big to fail model. And you can see sort of many of the things that we critique about it. It's regulatory capture, use of political power to support really a centralized banking system. And a solution a lot of people throw out is the idea of banking local. But it's really not enough for a couple of reasons. One, because it's becoming less and less possible. The number of local banks has radically declined in the last 50 years, 60 years. And primarily there's many reasons, but because too big to fail banks really have developed this kind of unfair market power. And even if we were able to do just simply local Vermont banking, the Vermont banks that do exist don't really offer a fully just model. The Vermont Bankers Association's office is 15 feet from the Department of Financial Regulation's office. It's the same problem as Wall Street, but closer in. So credit unions offer an interesting alternative because they are cooperatives owned by their members. You have truly democratic control, one member, one vote, and they're not for profit, so that but they do make so they operate sort of at cost, theoretically, benefiting the community and having surplus earnings returned to the community. And also they offer a really resilient model, because this is a graph of relative failure rates of commercial banks versus credit unions, and you can see about the same in times of economic stability, but in times of crisis they fail at a tiny fraction of the rate, largely because they are owned by their members, so there's no incentive to sort of behave exploitatively. So they also resolve some of the issues with kind of the traditional bank local, because they're owned cooperatively, it's harder for a too big to fail bank to use its market power to just take it over. And the common bond ensures that that these institutions are really rooted in the community they serve. Now this is a comic from a Quebec credit union movement comic book they put out in 1990 that I think really sort of illustrates this idea of comparing a bank as this extractive institution to a credit union, which kind of networks together institutions within a community rather than subordinating to outside interests. So the idea being that a fully actualized kind of credit union-based economy looks like there's largely democratic control over financial decisions in the community. You have greater reinvestment, so the financial system exists to serve the people who participate in it rather than to serve a small group of people who control it. Now, there's some barriers to credit unions actually actualizing this, in that, one, credit unions have become much larger, and so members have become alienated, there's less of a sense of community, and this has been largely driven by the interests of management. A manager wants to manage a larger institution, so even if that doesn't benefit the members, that they sort of push that forward. So in terms of kind of trying to bring out this potential, reviving kind of the democratic process in credit unions is really important. So a strategy that we've actually tried in Burlington has been to gather a kind of group of like-minded people and start reviving that process by getting involved. In Vermont Federal Credit Union, we formed a team of folks. We put forward candidates for open slots. Of course, again, we ran into resistance from management who didn't want their kind of unilateral control challenged, where they changed the rules on us. They, ended up the regulator had to sort of slap them down and tell them that they couldn't do what they were going to try to do because it was illegal. We ultimately were able to win a seat at the table. So the idea is once you kind of have this democracy, then feeds into a sense of meaningful member ownership, where instead of it just being, oh, okay, I'm a customer of this institution with a little bit of a different structure, people sort of see their interests and the interests of that institution as being aligned. And once that alignment is achieved, then credit union members, I think, can be sort of more easily mobilized to politically in support of kind of an alternative financial system, in particular in opposing the interests of the too big to fail banking lobby, so that when bailouts come up, people there's a group of people who can push back. So, and even one credit union with tens of thousands of members can, I think, be a source of real political power, but if ultimately these institutions, which are throughout our whole society, more than 100 million members, can be networked together, that's a really important source of power. And so the group at Vermont Federal has decided to form a larger coalition called Members for Credit Union Democracy, where we're encouraging other groups to form sort of pro-democracy caucuses, essentially, at their credit unions and push for spreading this model through kind of a bottom-up federation. So basically, and then the goal is to ultimately have this kind of revolution be self-perpetuating by having, when a credit union sort of comes into the Members for Credit Union Democracy fold, it then essentially, in turn, funding the support and expansion for groups that are either opposing the collapse of democracy at their organizations or just going in and increasing participation. Now, I think that once a credit union is democratized, they can be really bulldogs for kind of localist agenda. And an example of this on a small scale right now is the most democratic credit union in Vermont is the VSECU, and they've done a number of innovative things, including having a credit card where if you buy in-state purchases, you pay a lower interest rate. And then I think that another piece of this is that credit unions can really be these petri dishes for experimentation in the financial system because they're democratic. So, looking into sort of setting up these sorts of peer-to-peer lending and barter systems, you've already got a network of people in place. Cultivating strong member-worker networks so that in a crisis, it doesn't just go out of business. You can support unemployed member work for the capital required to operate. Basing complementary currencies or alternative currencies in these institutions. However, this is where the importance of mobilizing those members first comes in, because anything that's actually an effective experiment will be opposed by the banking lobby and by the state regulators who own them. So we need people to defend it. Thank you.